Hey everybody, Jared Duckett, Duckett Ladd, Dental CPAs and Advisors here with my business partner, buzzsaw. Buzzsaw, what's happening, buddy?
Hey, I'm doing good, Jared. How are you doing today?
I'm doing good, man. We were kind of unpacking, kind of how we're going to talk in some of these videos coming forward. And man, some of this automotive deduction stuff gets complex, doesn't it? It gets
You
deep into the weeds.
you can really get down into the nitty gritty. Yeah.
So what we want to try to do, that's why we're doing this little series. And I say series, if you're watching this, for the first time, go back and check out our episode right before this, where we kind of get just really, really high level, on kind of the automotive deduction and how you can take advantage of writing off your vehicle, through your business. So go back and look at that one. We got really high level again, but really what we did, and we'll just kind of piggyback off that episode, Buzzsaw, is, we talked about, hey, if a client calls and says, hey, Buzzsaw, can I write off my vehicle? And what was your answer?
The first question is, are you an employee or a business owner?
Yeah. And we kind of covered that, hey, with the employee, the W-2, how that works and how you're not able to take advantage of it, if you will. So really what we want to do here is kind of tangent to the other side of that question. And it's, if the answer to the question is, well, I'm a business owner. I own my own dental practice, right? Or I'm an associate, I guess. I guess it could be an associate that is not a W-2, but they're getting, they're a 1099, which most associates aren't 1099s, but that's for another day. They're typically W-2, but they get paid via as an independent contractor. So how would you answer that question, Buzzsaw? If they say, yeah, I'm a dental practice owner and associate as a 1099, how do I depreciate, or I shouldn't say that, how do I utilize the vehicle there?
Yeah, so there's kind of two methods you need to think about that you can kind of use to take a deduction on your vehicle, and that's the standard mileage method or the actual method. And the standard mileage method is where you track your miles that you actually drive the vehicle, and then the IRS publishes their standard mileage rates that you can use to calculate your deduction. And then the actual method is where you actually keep track and records of your expenses that you actually spend on your vehicle, gas, depreciation, all of those things.
Yeah. And that's why we want to split this up, is because we're going to talk this episode specifically about the standard mileage method. Next week we can go into the actual method. And I think what's going to be really cool is the week after that, we're going to kind of go through a case study. Because there's a lot of analysis you need to do, with your CPA as well, on which method to kind of go down, what's going to make the more, advantageous deduction for you. So what I want you to hit on real fast, Buzzsaw. So let's just say an example, boom, bought a car, truck, whatever. In that first year, you're kind of doing this analysis. Hit on how that works. So can you go back and forth, or how's it work? Like picking
that's a great question, because like you said, if you want to be able to do that analysis in future years of, hey, is actual method better or standard method better, you have to pick the standard mileage rate that first year. That is the only method you can switch back and forth from. So you could do standard mileage, the actual in the third year, back to standard in the fourth, if that's better. If you choose the actual method the first year you buy a car, or the first year you start a business, you have to use the actual method until you purchase a new car.
That's right. So that first year's key. Make sure you know which one you're using. Okay, so let's dive in. Let's say, okay, bought the car, standard mileage method, do the evaluation. Standard mileage method is more advantageous. How's that work? Let's talk 2021. Standard mileage method. How do you take advantage there?
Yeah. So the first thing I would do is, take a picture or somehow note where your car's odometer is to start the year or to start your business, so you know what your starting point is. And then you're going to need to track your business miles versus your personal miles. And that percentage at the end of the year is going to dictate how much of the car's expenses you could take on the actual method, or it'll determine your mileage rate. Say, we'll keep it easy. I drove 10,000 miles, 5,000 of it was for business use. Then I take that 5,000, multiply it by the mileage rate, which in 2021 is 56 cents. And there's your standard mileage deduction.
Yeah. So the standard mileage rate, you're basically keeping track of your mileage, business mileage, then gets multiplied by that rate. You said what, 56 cents for 2021?
Yep.
And that's the amount of the deduction that you're able to get. There's a lot, I get the question all the time, like, how do I track? Do I have to track my mileage log? Do I need to keep track of this stuff, or can I just put something down at the year end? How do you answer that, Buzzsaw?
Definitely keep track of it. Yeah, there's lots of ways out there that you can do that. There's apps that you can, download to help track your business mileage. The old-fashioned spreadsheets you can use to track your business mileage. Something to corroborate what mileage you have driven in case of an audit.
Yeah. There's a lot of apps out there. MyLikeQ, I think, is one we mention a lot of times. There's several out there that we use. Some are free, some cost, but it's really handy, especially what apps can do these days. I don't know if you've seen a Buzzsaw, but I think MyLikeQ and some of these actually have the auto detection on. It's so crazy. Like when you get in the truck and you got your cell phone, right? You got your iPhone with you, you start driving, it picks up that log.
Wow.
And then when you get to the destination, it stops it and you can swipe business personal. So check those out. We might put some of those links in the show notes, but document, especially on this automotive deduction. And I will say, Buzzsaw, you hit on it. Of course, you have to keep track of your standard mile or your miles for the standard mileage method, but you kind of got into it. You have to keep track of it as well as we get into next week's video on the actual method to see what percentage of those actual expenses you can take. So just don't think, well, I'm not doing standard mileage, I don't need to keep track of miles. I'm getting ahead of myself, but
Yeah, always keep track of your miles. Yep.
Always. So is there anything else with the standard mileage rate, any other expenses? Because the standard mileage rate covers your gas, the normal wear on your car and all that sort of thing. Anything else that you can take in addition?
Yeah, that's a great question. So even if you are on the standard mileage rate, there's several expenses that you can actually still add in addition to the standard mileage deduction, as we'll call it an actual expense. And those are any interest expense that you have on your car loan, your personal property taxes that you pay on your car, and any parking fees or toll fees that you incur. All of those can be actually added to the standard mileage deduction in accordance with that percentage. In our example, it was 50% of that business use. Yeah,
that's key. Is just make sure you monitor that percentage times the total expense to take advantage. Okay, Buzzsaw, I think that's it, man. Again, this is the easier video. Standard mileage, pretty simple, but again, doing the analysis, choose which method makes the most sense. Keep track of your mileage over and over and over. And then at year end, come tax time, it's pretty easy, right? You get the mileage log from your app. It's easy to use. And then you take advantage of it there because it's very easy to go throughout the year, get through, we're in July. Like, oh crap, forgot to log the first 6 months of the year. Get an app, get a consistent method to do it and stay with it. So sweet. Buzzsaw, I appreciate it, man. Like I said, next week, maybe a little longer next week. We're going to dive into the actual method, which is a little more complex. And then the week after that, we're going to do a case study. And I think this is going to be really cool because anytime you buy a car, truck, whatever, you got to do this analysis to make sure you get the most bang for your buck.
Yep.
So perfect, man. Buzzsaw, appreciate it.
Yeah.
Let's get out of here. And everybody out there, we'll talk to you next week.
All right. Sounds good. Thanks, Jared.
See you guys.